Let's talk about 1099 problems, right? What if you get one that's wrong? Welcome to the Sunlight Tax Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, design nerd, tax pro, author of Taxes for Humans, and the founder of Sunlight Tax. If you're a creative, wellness, or mission-driven entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hi, beautiful. So good to be with you. Today on the podcast, I want to get into 1099 problems. So cue the Jay-Z, 99 problems. Let's talk about, as we're getting to the end of January, if you owe 1099s to anybody, those are due January 31st, must be postmarked or, sent out on January 31st. Penalties start February 1st, so make sure you've done that. But I also want to talk about the other side of 1099s, which is receiving them and reporting your income that you get reported on a 1099. So let's get into it. First, let me just have a little quick sidebar. If you were listening to this the moment the podcast drops, I want to just make you aware that at noon today, Eastern, I am hosting a free class. This one is my biggest of the year, and I'm giving a big reward to people who come live to the class and stay to the end. I'm giving away my January setup checklist. So if you are interested in coming to my free class today, it's happening just in a couple hours. If you're one of the early birds who listens when the podcast first comes out, my class is called Make Taxes Easier and Stash an Extra $152K in Your Savings. It's a class where I talk about the mistakes that freelancers make with their taxes, how to avoid them, give you a little basic tax information, talk about systems that help make it easier every year. And I also do the math of compound interest in investing and show you really the power, the unbelievable, surprising power of putting money into an IRA and having that money invested. So I will show you the compound interest growth. It's a little bit wild when you actually look at the numbers. So if you're interested in that class, I'm mentioning it because it's happening today, the day the podcast drops, January 27th. And you can save your seat and come for free at go.sunlighttax.com/free. That's go.sunlighttax.com/free. Okay. With that aside, let's jump into 1099s. Okay. So one new thing this year with 1099s, the One Big Beautiful Bill Act reverted the baseline for 1099Ks. That's the kind of 1099 you get if you do online sales or run payments through a third-party payment processor like Stripe or Square. That threshold for getting those reporting statements, 1099Ks, it was on its way down. It was scheduled to be a lower amount this year, but got changed. And so now for 2025 taxes, so the taxes that you're doing right now, you will only get a 1099K this year if you had over $20,000 in transactions and 200 transactions. This can easily happen if you, run your business and take credit card payments, right? You can easily cross that threshold. But you might not get a 1099K that you were expecting if you have an amount lower than that. So I just want to make you aware of that little change. With all things income in your self-employment, of course, you are still required to track that income and report that income. So don't get that backwards. You still have to report the income. Also note that states may have kept their lower thresholds for reporting 1099Ks. And so you may still be getting a 1099K for a smaller amount or fewer transactions because of a state rule. So just be aware, 1099Ks that come from third-party payment processors, you might get fewer of them this year because of that little threshold change in the law. Okay, mostly today what I want to talk about is 1099 NECs. That NEC stands for non-employee compensation. And those are the 1099s generally that you get for, doing work for someone else, doing freelance work, contract work. If you're a product photographer, you might get 1099s from clients because of that, right? So the general basic rule is if you earned over $600 from somebody cumulatively through the course of 2025, they owe you a 1099 to report that income, okay? Again, don't get confused. That income is reportable no matter what amount it is. Even if you earn $25 or $599, you still have to report that income. You just only will get that 1099 if you earned over $600, generally speaking. Okay. So 1099s are due to you January 31st. That's the date they have to get issued, right? So this goes both ways. If you owe someone a 1099, you better get that out the door by January 31st because the penalties start, and they're big. Penalties start February 1st. By the way, I do have a course on that. If you need help issuing your 1099s and you want to get my course, I priced it below the fee, below the penalty for being 60 days late. sunlighttax.com/1099 if you're interested in my 1-hour course on how to get a checklist, get the tools to issue your 1099s. So that help is available if you need it. But basically, penalties start February 1st. So what you want to know is this is the time of year you're going to be receiving your 1099s. It's time for you to do bookkeeping for 2025, calculate the amount that you earned for 2025, and be gathering up all your 1099s, which you're going to need as you file your taxes. You're going to need to report each 1099 you receive on your tax return, generally on your Schedule C, which is where you put your self-employment income. Okay? All right, let's talk about 1099 problems, right? What if you get one that's wrong? 1099s are wrong all the time because people do them too fast. They don't double check their work. They just don't know how the rules work, right? So it's actually pretty common. So when you get your 1099s in the mail, I want to recommend that you check the info. First, check it against your bookkeeping and make sure the amount that the person is reporting that they paid you, make sure it's accurate, right? I have seen 1099s in my tax practice before where somebody puts an extra zero on it, right? It's just a typo, but do I want to report that I made $100,000 when I only made $10,000? Not exactly, right? It's a big deal. So when something like that happens, you need to contact the person who issued the 1099 and get them to issue you a corrected 1099. It's really important. You should get a corrected 1099 if they report the wrong amount, if the amount does not match the amount in your records, if they misspell your name or get your legal name wrong, or if your taxpayer ID number, Social Security number, ITIN is wrong on the document. That's a big deal. That's no small thing, okay? So what you want to do is contact the issuer and you're asking them to issue you a corrected 1099. And super important, I would just walk them through exactly what was wrong, what you need corrected, what you need it corrected to, and make sure they know they have to check the box that says corrected. Why is that so important? Well, if you check the box that says corrected as you issue a corrected 1099, that will override the original 1099 and replace it, right? If you don't, and I've seen this happen, if you don't have that box checked, that person is simply issuing you an additional 1099. And now you have two amounts of income to report to the IRS, okay? So it's very, very important that your 1099s are accurate and you get them corrected if they are not. Okay, next up, let's talk about tallying your income. I have a little tip for you. Tallying your income, you want to do your bookkeeping for 2025. It is the law that you have to report all the income you made from your self-employment. You have to report it, right? Now remember, you get deductions. Amazing. And that's going to reduce your taxable income. You're only going to be paying tax on the profit, but you have to report the full amount of income. Okay, so there's two things you're reporting here, full income and full expenses to get the benefit. Now, one of the tricks that I teach in my book, Taxes for Humans, one of the tricks that I teach in that book that I really recommend you use is when you've got your total income that you're about to report on your Schedule C for your self-employment, split the income into two columns, okay? And in each of the columns, put one column is amounts that you expect a 1099 for, And the other column, put amounts that you do not expect or will not get a 1099 for. Split the income into those two columns and make sure as you're doing your taxes that you keep adding up the two columns and that they equal the full amount of income that you earn that your bookkeeping says, okay? That's your check and balance, so you know that you are reporting everything you're legally required to, but also that you're not accidentally double counting any income, right? You want to actually check your tax return to make sure before you hit submit that that amount that you're reporting is correct, okay? It is so easy to forget to report income if you're just relying on your 1099s to be the only bookkeeping that happens and the only income that you report is the income that came on 1099s. That's not a good system because a lot of times, one, people might forget to issue a 1099, and sometimes you'll get it months later when their accountant forces them to issue them even though they're late. That can happen. And also, it gives you the record to show if you get a late 1099 and the IRS says, hey, we got a 1099 reporting your income and we didn't see that you reported that income on your tax return. That's so easy to happen if somebody issues a late 1099 to you. You have that documentation of the two columns and you have that income from that source laid out in the I didn't get a 1099 for this column. You can show that as proof to the IRS that you did in fact report that income. And then you don't have to double pay taxes on that, okay? Which a lot of people do just to make the IRS go away, even though they had some recourse that they didn't know about. So that is my tip for reporting your income. Make two columns, 1099 and no 1099, add them together, make sure it equals the total in your bookkeeping of income that you made for the year. That is going to be your saving grace. All right. Remember that the baseline is you have to report all your income, but the good news is you also get all your expenses. If you have somebody in your life who's going to need to issue a corrected 1099 or who owes you a 1099 who needs help, feel free to send them the link to my course. Maybe they need some help. It's really common. But I hope that this just gives you a little tip and trick to make sure that your 1099s are reported to you correctly, that you get them corrected if you need to, and that you report the correct amount of income so you follow the law and you don't overpay your taxes. All right, I hope this was helpful for you. I will see you next week. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available wherever you buy books and at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.